Welcome back to the Working Thesis. If you have been following along with our exploration of the AI power chain, you know we've spent a lot of time looking at the massive, high-profile machinery that generates and routes electricity. We have talked about the giant transformers, the massive switchgear, and the heavy turbines that make up the backbone of the modern electrical grid. But today, we're going to zoom in on something much smaller, but arguably just as vital. Because here is the reality of physical infrastructure. You cannot string a high-voltage transmission line, you cannot build out a billion-dollar substation, and you cannot wire up an AI data center without the humble, unglamorous hardware that actually holds all of those massive pieces together.
Exactly. We are talking about the physical connectors, the insulators that keep high voltage from arcing where it shouldn't, the grounding equipment, the specialized enclosures, the switches, and the meters. This is the connective tissue of the grid. It is the unskippable layer of electrical infrastructure. And when you look closely at who dominates this specific, highly critical niche in North America, you invariably run into Hubbell. Ticker symbol, UB.
Hubbell is what we like to call the pick and shovel inside the pick and shovel. When the gold rush of grid modernization and AI data center expansion happens, companies are buying shovels from the big equipment manufacturers. But those manufacturers and the utilities themselves are buying the handles and the bolts for those shovels from Hubbell. Today, we're going to tear down exactly what this company does, why its hardware is essentially impossible to bypass, and what the financial reality looks like under the hood.
First, a quick and honest word. Everything you're about to hear is really just the two of us thinking out loud. Personal market commentary, made for learning and for fun. It isn't investment advice, and it isn't a recommendation.
And when we talk about a specific company, it's only ever to make a bigger idea click, never a nudge to buy or to sell. So take it as a starting point for your own curiosity. Do your own research and make the call that's right for you.
Before we get into the nuts and bolts of what Hubbell manufactures, let us briefly touch on why this specific company is on the screen right now. Hubbell is a fresher find for us in the context of this series. It showed up on the radar recently because it experienced a healthy pullback from its prior highs, presenting what looks like an emerging technical setup that warrants a closer look.
Right. We use a specific screening methodology to surface these setups, looking for that intersection of relative strength, sector tailwinds, and constructive price action. We will not spend the whole episode going over the mathematical mechanics of that screen here. If you are curious about exactly how we filter the market for these patterns, we have a separate methodology explainer video that breaks it all down in detail.
The important thing to understand is that the technical pattern is just the first filter. A constructive chart pattern might get a company onto our desk, but the business fundamentals are what dictate whether it stays there. The pattern is the invitation, but the business has to justify the attention. And with Hubbell, when you look past the chart and into the actual operations, you find a business model that is deeply embedded in one of the most inevitable secular trends in the market today.
To really understand Hubbell's place in the market, it helps to map it against the broader ecosystem. In the grand arc of electrical infrastructure, you have the heavyweights. You have companies like GE Vernova and Eaton, which we have discussed, making the massive capital equipment. They are building the overarching power management systems, the heavy turbines, the primary transformers that define the macro structure of the grid.
Hubbell operates one layer down from that. They make the unglamorous grid components that everything else physically bolts onto. When a utility company installs a massive new transformer from a Tier 1 manufacturer, that transformer has to be connected to the broader grid. It needs surge arresters to protect it from lightning strikes. It needs specialized polymer insulators. It needs incredibly robust mechanical connectors. That is Hubbell's territory.
They sell to essentially every major utility in North America, and increasingly, they are selling directly into the data center supply chain. And from a market perspective, sitting a bit further off its absolute high than some of its bigger, more highly publicized peers in the electrical equipment space, Hubbell presents a slightly different angle of approach. It is participating in the exact same supercycle of electrical demand, but it is currently sitting on a touch more of a discount relative to the high-flying giants of the sector.
Let us break down the actual business structure, because Hubbell is divided into two primary segments that address different sides of the electrical equation. First, you have utility solutions. This is the heart of their grid and transmission and distribution hardware business. We are talking about the physical gear the grid runs on.
In the Utility Solutions segment, Hubbell is manufacturing the high-voltage transmission components, the heavy-duty switches that allow operators to isolate parts of the grid for maintenance, the polymer and porcelain insulators that are strung up on towers across the country. They make the surge arresters that protect billions of dollars of downstream equipment from electrical spikes, and they produce the advanced metering infrastructure that allows utilities to actually measure and bill for the power being consumed.
Then you have their second segment, Electrical Solutions. This side of the house focuses on the inside of the building. It includes specialized wiring, commercial and industrial lighting systems, and crucially, an increasing portfolio of data center gear. Under the leadership of Chairman, President, and CEO Gerben Bakker, Hubbell has been very intentional about positioning both of these segments to capture the dual wave of grid modernization on the outside and facility electrification and data processing on the inside.
It is a very deliberate structural alignment. They are not just selling random electrical parts. They have organized the company to be the default supplier for the utility, bringing the power to the site, and the facility manager distributing that power inside the building.
That alignment is showing up clearly in the numbers. When you look at their recent filings and consensus estimates, the financial engine is running hot. In the first quarter of 2026, Hubbell reported that organic sales grew about 8% year over year. And importantly, that growth was led by double-digit organic growth specifically in the Electrical Solutions segment.
The momentum in that segment is a direct reflection of what is happening in the broader economy. On the back of that strong quarter, Hubbell raised its full-year guidance. They are now projecting roughly 7 to 9% total sales growth for the year. What we are seeing here is the convergence of two massive, generational tailwinds hitting the exact same company at the exact same time.
First, you have a historic wave of utility grid spending. The North American grid is aging rapidly, and utilities are being forced by both government mandates and pure physical necessity to upgrade their transmission and distribution networks. That is a massive, multi-year capital expenditure cycle that flows directly into Hubbell's Utility Solutions segment.
And second, you have the surging AI data center demand. Data centers require highly specialized, incredibly reliable electrical components, from the grounding systems to the power routing enclosures. In their recent earnings calls, management has explicitly cited data centers as a named structural growth driver. They are capturing the macro grid upgrade, and they are capturing the micro AI facility build-out simultaneously.
The core point of the Hubbell thesis is its sheer inevitability. There are a lot of ways to play the energy transition or the AI boom. You can bet on specific software or specific generation technologies or specific server architectures. But no matter which technology wins the computing race, the physical infrastructure rules remain the same.
You literally cannot expand the grid without this layer of hardware. Every single new transmission line that gets strung across a valley requires insulators. Every time a new substation is built to step down power for a new AI data center, it requires specialized enclosures and grounding equipment. Every time a utility upgrades an old neighborhood grid to handle electric vehicle chargers, it needs new meters and connectors.
Hubbell dominates this exact space in North America. It is a fundamentally boring business. People do not write headlines about polymer insulators or mechanical grounding clamps, but it is mission critical. If a cheap, unverified connector fails, it can bring down a multi-million-dollar substation or cause a regional blackout. Because the stakes are so high, this layer of hardware is incredibly hard to substitute. You simply do not build a trillion-dollar grid upgrade and skimp on the connective tissue holding the high-voltage lines together.
That mission-critical nature brings us directly to the company's moat, which is all about how sticky this business really is. Hubbell has built a dominant North American position specifically in utility, transmission, and distribution components. But the real barrier to entry isn't just manufacturing capacity. It is the qualification process.
In the utility industry, products have to get what is called spec'd-in. When utility engineers design a transmission tower or a substation, they write specific, approved components into the engineering blueprints. Getting a new part approved by a major utility involves a grueling, long-term qualification cycle. They have to test it for extreme weather, load stress, and longevity.
Once Hubbell gets a component spec'd in and utility approved, it stays there. Engineers are inherently risk-averse. They are not going to swap out a trusted Hubbell insulator for a cheaper alternative from an unknown startup just to save a few pennies, because the risk of failure is too catastrophic. This creates massive, very real switching costs.
Combine that with a deep, established distribution network and a portfolio of highly trusted brands, and you have a very wide moat. Hubbell is much more focused than a massive conglomerate like Schneider Electric or Siemens. It has less software revenue, and it is less globally diversified. But in this case, that intense focus on North American physical grid components is the entire point. They own their specific, highly profitable corner of the sandbox.
Now, they are not operating in a vacuum. Hubbell does face serious competition across different parts of its portfolio. Rivals like Eaton, nVent, and Schneider overlap with Hubbell in various pieces of the electrical supply chain.
Eaton is a massive player in power management and primary electrical equipment. nVent is a fierce competitor in specialized electrical connection and thermal protection solutions. Schneider is a global titan in energy management and automation. If a facility manager is outfitting a new industrial site, they are likely looking at catalogs from all of these companies.
But Hubbell's specific edge is its depth in utility, transmission, and distribution components. While Eaton might be selling the overarching power control system, and Schneider might be selling the software that monitors it, Hubbell is selling the unglamorous grid guts that physically tie the utility's power lines to the site. Their market share in North American utility components is formidable, and their brand equity with the line workers and utility engineers who actually install the gear gives them a distinct, durable advantage in that specific vertical.
We have to look at the other side of the ledger, because no business is immune to gravity. The primary risk for Hubbell is that it heavily rides the utility capex cycle. Right now, utility spending is robust. But if interest rates remain elevated for longer than expected, or if regulatory environments shift and utilities are forced to delay their capital expenditures, Hubbell's order book will feel the impact directly.
Additionally, as we noted, it is smaller and less diversified globally than the European or multinational giants. If the North American grid expansion hits a speed bump, Hubbell does not have a massive European or Asian software division to completely cushion the blow. And regarding the stock itself, the current pullback we are seeing could always deepen into a more protracted consolidation.
There is also the reality of commodity input costs. Hubbell manufactures physical products. They buy a lot of copper, steel, and aluminum. If those raw material prices spike suddenly due to supply chain disruptions or global macro events, it can squeeze Hubbell's margins. They have historically been very good at passing those costs on to customers through pricing power. But there is always a lag, and rapid commodity inflation is a persistent operational risk they have to manage quarter after quarter.
Let us take a careful look at the map and how the market is currently treating the stock. As of early July, the stock sits a bit more off its absolute high than many of its peers in the electrical equipment space. It is a healthier pullback, currently exhibiting relatively neutral momentum rather than an overheated, overbought condition.
When we look at the structural levels, on the downside, market participants might watch its 200-day moving average as a first line of potential reference. If the broader market experiences a shock, you look further down to a deeper multi-month low as the next area of historical market memory. On the upside, its 50-day moving average is right overhead, acting as potential near-term resistance, with the prior all-time high sitting well above that. And for what it is worth, the median target from fundamental analysts sits higher still.
But we say this every single time. These are levels that move. The market is dynamic, and moving averages adjust every single day. What you do with this map, how you interpret these levels, is entirely your call. There are no positions here. There is no advice. There is no call to act. We are just charting the territory so you can see where the market has historically found balance, allowing you to make your own decisions based on your own risk framework.
Let us pull all of this together. If you have to distill the fundamental argument for this company down to a single thought, it is this. Hubbell is the pick and shovel inside the pick and shovel.
It is the grid hardware nobody can skip. Whether you are building the AI future or just keeping the lights on in a growing suburb, you need the connective tissue they manufacture. And right now, it is available on a bit more of a discount than its bigger peers, offering a focused, highly profitable way to view the North American infrastructure supercycle.
That wraps up our deep dive on Hubbell. As always, remember to do your own research. Everything we discuss here is for educational mapping. It is not financial advice, and how you choose to navigate these names is entirely up to you.
Next up in the AI power chain, we are moving to a critical bottleneck, cooling. The heat generated by these new AI data centers is staggering. And we have actually already published a full standalone deep dive on Vertiv, the absolute cooling standard in the industry, which you will find right here in this playlist.
Exactly. Check out that Vertiv episode next. After that, we're going to cross over to the other half of the power chain, the riskier, highly volatile generation layer, starting with NRG energy. You will not want to miss it. See you in the next one. And that's where we'll leave it for today. Thank you, genuinely, for spending part of your day thinking this through with us.
The whole idea of this show is pretty simple. We hold a handful of theses about the world, and we test them out loud, together, a little more each day. No crystal balls, just curiosity, and a willingness to be wrong.
So, if that's your kind of thing, stick around for the next one and tell us where we're getting it wrong. Honestly, the pushback is our favorite part.
Until next time, take care of yourself and keep asking good questions.